Hi, my name is Alvin Brown. I'm a tax attorney. The topic today is IRS abuses of power, abuses of discretion, taxpayer intimidation. It happens. I had a long career in the office of the IRS Chief Counsel. There, I'm pleased to say the atmosphere was quite professional. Everybody there was good. Our job was to interpret the law, and that's what we did, and we did it following the intent of Congress. When I use the term an IRS abuse of power and abuse of discretion, these are situations where the IRS is taking advantage of taxpayers. For example, I think that if you are not represented the current level of IRS employees, and these are not the ones who I worked with in the IRS National Office. These are people who are trained to collect money. These are examiners. They're out to, well, let's talk about the collection people first. If you owe them money, they're going to go after you to collect it. In many instances, they don't tell the truth. They try to scare the pants off of you, so they're intimidating, and they don't necessarily tell you your rights. If there's a levy or threat of levy, they can be appealed. In the appeal, you can submit, let's say, a settlement, an installment agreement, offer a compromise, and there are things that can be done. You should be represented, and if you are, certainly by a competent attorney, then the risk of abuse is reduced. I'm not selling here. I mean, it's a fact. If the IRS will take advantage of you, they often take advantage of your local representative because they have another client base, and that client base they want to have a good rapport with the IRS. They don't want to fight with them. They want to go along with them because they're thinking about their other client base. So there is some disadvantage of using your local representatives for that purpose. Anyhow, if you do go with anyone, it should be a tax attorney. It should be an experienced tax attorney. The IRS can't play the same kind of games with the tax attorney they can do with you. When it comes to collection, they're not your friends. They're out to collect money. They don't care if you live in the street. They don't care if you. By the way, they do things. They do levy income and bank accounts. They create hardships. They do it almost always in a way that's going to create a hardship on you. They'll file liens against the business, not caring if that business is going to fail because of a tax thing. That's an abuse of discretion, and it's wrong. There should. Before they take these kinds of collective actions, they should take into account the hardship it's going to take. I mean, if they levy your income, they should know that they can't, under law, they can't take money that you need for food, clothing, transportation, health care, your medications, but they do it. And so that's an abuse of power, because under law, they can't do that. And if they file a tax lien against you because you owe them $1,000, whatever it is, or actually it's going to screw up your credit for 7 years after you resolve your tax debt. That's an abuse of discretion. They don't take into account the harm that it's going to do to you when you're involved in some kind of an IRS collection action. The same thing happens on examinations. My goodness, I hate to say this, and IRS people are going to see this, but in many cases the IRS does not apply the law correctly. So they misapply the law in many instances, and they're under pressure to collect money. They're under pressure to take positions that are extreme positions, and so that's an abuse of discretion as well. Not in every instance, of course, but in many cases. Anyhow, I really don't want to go on and rant like this, but you get the idea that the IRS is not necessarily taxpayer friendly. They're an adversary to you. Their collection actions are extreme in almost every case. And I don't know of any instance where the IRS files a lien where it doesn't cause a hardship, and they do it capriciously, filing liens, and it's just going to kill you. You know, with a tax lien, you can't get a card, you can't get a credit card, you can't charge food at the grocery store. And not only that, but even when your tax debt is resolved, that tax lien is going to be in your credit report for the next 7 years. It's huge. It's huge. They even do that when you get into an installment agreement. I believe it's an abuse of discretion to punish a taxpayer for who's willing to pay for their tax debt in an installment agreement, and they do that. They'll file a tax lien on a business, even if it means that business is going to fail, because how does a business function with a tax lien? You know, they need credit, they have to get inventory. They hit a tax lien on people who are a service provider. Well, the lien doesn't do anything good. I mean, the purpose of a tax lien is to give the IRS priority over other creditors. But most people don't have serious assets. The people in businesses who are service providers, there's nothing there that the lien will be effective on other than to punish a person who's providing a service as a business. So that can be a contractor, and of course a lot of people have minimal assets. A lien would be effective, tax lien would be effective. There's a lot of equity in a lot of real estate, and then there is a reason for the IRS to want to protect its position as a creditor against future creditors, and I can understand that. But typically, the average person doesn't have that situation. The average person, we get calls from people around the country. We have clients around the country, we have clients abroad, and it's always, most of the people who are calling us have a problem. Their income is limited, their assets are limited. Of course, we're now going through this horrendous economy, and that's a problem. But with regard to all of these things, you minimize the intimidation of the IRS, you minimize the abuses if you have competent representation. I just make it clear over and over again that the IRS will take advantage of taxpayers. They will take advantage of local representatives. They will push. One of the reasons is that there's no effective IRS oversight. So they have a lot of discretion. They push the envelope. And so what are you going to do? In some cases you can file a misconduct complaint against them. There are appeal rights to liens. There are appeal rights to levies. But what really troubles me, and what's really sort of almost like a permanent stain, are these tax liens. And of course, I think it's unconscionable that they levy businesses. Let's say they'll take, there's a bank account, there's money in the bank account for taxes or for payroll. They'll still levy the account. And what is that going to do? It's going to bring a business down. Well, this is what we're dealing with. If you have any problems, if you're dealing with the IRS and you want some counseling, I'll give you some free counseling. Just call me up at 888-712-7690, extension 106 or extension 111, or even extension 104. I'll repeat that, 888-712-7690, extension 106, 101, or 104. You can contact me by email at ab@irstaxattorney.com. Thanks for listening. I get a little emotional on this topic. You have to forgive me for being a little emotional, but that's the way it is. It's not a pretty picture, but it's my experience, and I'm relating that to you. Thanks for listening.